Our first caller is connected with us. We have Mr. Prakash Rao, who's on the line with us from Hyderabad. Mr. Rao, good afternoon. How can we help you?
Good afternoon. You see, I am a retired government official and I desire to invest an amount of 2 lakhs.
Okay.
For a medium term. What are the script you are going to suggest me?
Is this your first equity investment?
No. Previously, I have some investment scripts.
Okay.
But in the present circumstances.
Okay, so you're looking to add some more. Can you give us some idea of what kind of portfolio you have? I mean, generally speaking, what are the kind of stocks you hold currently?
I am holding Mphasis.
Okay. Mayuresh, let me come to you first. Mr. Rao, he's retired, looking to invest a little bit more money, already has a few stocks which he holds. Any fresh ideas that you can suggest?
Afternoon, Sumera. So first of all, I think the amount of 2 lakhs that Mr. Rao is looking at, he should probably bifurcate it within 2 or 3 stocks and then just have a partial allocation done and probably add on to more positions as the market or the stock progresses. I think a couple of stocks, Sumera, that we like. One of them is Rain Industries. So as per the O'Neill methodology, I think we like leaders in their niche spaces, and Rain is a rightful leader in the space that it works out of. I think one of the largest leaders in terms of high value carbon based products. They're critical raw materials, specifically for aluminium, graphite, titanium dioxide, that adds almost to 70% of its EBIT. Now, with the EV and the electric vehicle space gaining a lot of strength, I think the activities that Rain does as a global leadership in terms of products like coal pitch, CPC products, or coal tar pitch, calcined petroleum coke, I think both these products are in demand for the end usage, which is going to expand significantly. It's also got a 10% business which comes from the cement part of the business, and cement is expected to do well with a lot of infrastructure activities and a hydrogenated plant of 50,000 MTPA, basically in Germany used for packaging, and that need will grow on as COVID or even in a post-COVID world. So in my opinion, I think it's a superlative story where earnings can compound, something that fits the Cancelim criteria. So I think Rain is something that I'll probably look at. The other one is Indo Industries. Now again, I think a leadership position specifically when it comes to the textile space and specifically in terms of the end products that it probably makes. The China Plus One strategy is clearly playing out for textile players. Abundance of raw material, labor costs are cheap, and therefore I think the margins that this company can keep on posting, because a substantial portion comes in from exports and the incentives that the government has laid out, I think that will aid and assist the earnings growth for Indocount as well. The capacities that they've probably at this point of time, the kind of cash flows that they generate, and very, very minuscule amount of debt onto its books. I think this can be a good story to play out from a medium-term perspective as well. So if I have to pick and choose at this point of time, Sumera, I think the Rain Industries Indocount. Obviously, I think the risk management in terms of stop losses are only 10% from the current level that you're probably looking at as a methodology that we do. And being leaders, I think ROEs remain extremely strong. So yeah, I think these two stocks.
Up next, we're now connected with Ujjwal Mehta, who's on the line with us from Mumbai. Ujjwal, good afternoon. How can we help you?
Good afternoon, Sabeda. Good to be, good to be there on the show. I have two queries.
Go ahead.
Yeah. I have bought Just Dance, so I'm dadding you.
Okay.
And want to know about the future of the Just Dance. The cost price of my Just Dance 200 shares is 810. No, 750 odd. And what can be the future of the Just Dance? It will get merged. There will be any buyback or something.
Okay. And you have another stock also, I believe, or just this one?
Yeah, Indian Metal Ferroalloys. I bought 200 shares, at 810. What can be the chrome industry future in general? Can I know from the panelists, please?
Sure, got it. Mayuresh, 2 stocks for you, Indian Metal and Ferroalloys and Just Style.
So, Sumera, I think let me start with the second one, Indian metals and ferroalloys. And since you wanted to know and understand about the ferrochrome industry in general, I think if you look at the transcript, specifically after Q1 results, it basically depends on the performance of the end user industry, that is stainless steel. Now, stainless steel industry has been growing leaps and bounds. And the expectation largely is that the growth of 20-25% that they've probably clocked this financial year over the last few months might very well continue. Therefore, I think the demand dynamics remain extremely strong. Now, let's come to the supply constraints. Because of environmental reasons in China, because of some issues related to ore output in South Africa, I think you're seeing supply-related constraints. And because of that, if you probably look at the spot prices, they have zoomed at this point of time. So on an average in FY21, as the management put out, around 70,000 odd rupees per ton, which was the realization. Last quarter, it came around 89,000 odd a ton. Looking at the current price level, the management is very hopeful of staying between 1 lakh and 1,10,000 rupees a ton. And therefore, the reported EBITDA, specifically from Mphasis case, they're expecting a 250 crore EBITDA for the second quarter, which means for the first half, including 175 plus 250, or rose to around 425 in terms of EBITDA reported as well. They're clearly going to get debt levels down. They're around 365 odd crores, expecting to get it around 300 odd crores. And the capex plans are laid out over the next few years, which basically means that cash accruals remain strong and balance sheet dynamics will remain extremely, extremely lucrative. So it's in the right cycle at this point of time. You can very well hold on to the stock. For Just Dial, I think a lot of corporate announcements that have happened, but clearly what they have not delivered is on the earnings front. I think a lot of expectations in terms of platform-raised companies. And you would have seen a lot of platform-based companies, valuations and price movement has gone through the roof. Because of its sheer underperformance, I think the earnings momentum has just not picked up with Just Dial. There has been some moment in terms of corporate action, specifically with Just Dial at this point of time, but I think earnings acceleration is lagging. So you may hold on looking at your buying price at this point of time, but I think you need to watch out for how the earnings are probably shaping up. Because if they are not, I think the re-rating in this stock will be a little bit difficult.
Melroy Fernandez from Bangalore wants to know the long-term outlook for BEL, Bharat Electronics. He has 167 shares, which he has bought at a price of 127. Mayuresh, how do the prospects look?
No, so I think looking at the defense spends that the government has been undergoing over the last few years and expected to do so, obviously BEL becomes a big beneficiary. So I think when you're probably looking at absolute numbers, I think the absolute numbers were very well in line. I think they reported revenues of close to 1650 odd crores in the quarter gone by. Obviously, there were some supply chain disruptions as far as the second wave was concerned. But in the conference call, I think the management was very, very hopeful. We're actually aiming at orders of around 16 to 18 odd thousand crores. And again, I think these orders are a mix of orders, right? From Akash missile systems to the warfare systems that you're probably looking at. No, they're optimizing costs as well, Sumera. This probably means that the EBITDA margins can very well be in the 20 to 22% of range. They're also now looking at the non-defense areas just for a small diversification within this space itself. It's around 7-8% now. They're looking to get it down to around 10% in the near future. And in fact, much larger over the next 3 to 4 years. They're also in talks with Ola, surprisingly, for the Leon battery packs, or the lithium-ion battery packs. And they will be making an initial investment of 500 to 1,000 crores. So they're trying to make the right moves. Defense, increasing share of non-defense, and getting into the EV space as well. Zero debt company, no debt on its books, and therefore I think the dividend yield also is reasonably. So definite hold from.